So today's topic can be a sensitive topic for a lot of people, and it's life insurance, okay? I want to disclaim by saying AllGen is not in the business of selling life insurance. We're not a life insurance company, but life insurance is an important part of a financial plan. Okay, well, as we study, I'm a certified financial planner, so as we study for our financial planning degree, they talk about life insurance as a module in and of itself because it's part of what's called risk management, which is the big part of foundation is risk management, because unfortunately life happens and so does death. Okay, so life insurance, if you have done a plan with AllGen, you should have your trail map, okay, which you can see on the screen, and the third section of your trail map on your foundation stage talks about life insurance, and the trail map will tell you if you have enough, etc. If you haven't done it, a plan with AllGen, that's okay. We're still going to talk about different types of life insurance, about how much you should have, always saying you should assess your situation specifically, but you'll have a better understanding of what type of insurance and how much insurance you should have given your circumstances, okay? So life insurance, what is life insurance? It's financial protection for loved ones, okay, in case of your death, okay? Again, I'm one of the most positive people, so is Jason, that you'll ever meet, but death happens. We've all experienced death personally, with family members, with friends. It happens, okay? So it's a way to protect the survivors, okay, from financial hardship, especially if they depend on your income. That's the second point. It replaces your income or financial value. We know that emotionally you're worth a lot more than any financial policy could ever replace, but providing the death benefit to your family lets them survive and not have to worry about the financial hole that you might be leaving behind, okay? So it offers that stability for survivors, okay? So that's what life insurance is. You're leveraging a company's money, okay, by paying what's called a premium today, for in case something happens, the company will pay the survivor's death benefit, okay? Now, why is this important? Again, your family loses your income and financial contribution if you pass away. So that can leave a big hole, you know, and create all kinds of other problems besides just financial, okay? Without life insurance benefits, those depend on your income are left in a very difficult position. And once enough assets are accumulated, life insurance really isn't necessary anymore. Because here's the thing, insurance is important, okay, and we're giving you our philosophy. There's other philosophies contrary to this, but we believe insurance is important to fill a void when you don't have enough built up to leave your loved ones enough for their financial stability, okay? So early on in life, young professionals who haven't built up wealth, insurance is important for that purpose. Once you build up that wealth, well, you don't need the insurance anymore because if you pass away, you leave your family the wealth.
That's right. I mean, imagine, you know, you're a married couple, you have kids, you get them through school, you know, they've gone off to college, and you've built up, you know, $1.5 million, and you have no debt. If something happens to the spouse, yeah, their spouse is going to miss that spouse, but they're going to be okay financially. Right,
because they're going to be able to inherit those assets from you. Now, if you want to leave a higher inheritance and you just want to have a life insurance policy and doesn't interfere with your budget, more power to you. But from a practical needs perspective, it's a way to leverage another institution's assets until you've built up enough wealth to not need them anymore.
That's right.
Okay? So now that you know why, how do I get life insurance? There's a few different considerations. There's type of life insurance. How much do I need? Okay, so what kind do I get? How much do I need? And how long do I need it for?
That's right.
Okay, now this is critical because they're all very important factors. This is where your particular circumstance may vary, and you have to do an analysis for your situation. So types of life insurance. Jason, I'm gonna let you talk a little about this because I know you get a little passionate about the different types of insurance because some are sold over others for different reasons. So talk to us about the different types.
Yeah, so first of all, you have the term life insurance, and for most people, we believe this is the proper one to use. Now, obviously, it's going to vary depending on each person, but the way term life insurance works is you're protecting the risk of something passing away with a death benefit. Like, let's say, for example, you get a 20-year, $1 million term policy. So that means it's protecting you for the next 20 years. If you pass away, you'll get $1 million.
Your beneficiaries will get $1 million.
That's true. Right. Your beneficiaries will get $1 million. So the benefit of the term, the big benefit is that it's really a lot less expensive. Sometimes 1/10 of the price of the other types of life insurance out there. Now, group is provided by your employer.
Right.
That's probably going to be your cheapest one. All right.
That's
Employer provided life insurance is going to be one of the cheapest ones. However, the death benefit is usually a multiple of your income, and they don't usually give you enough for the full amount that you need. And we'll get to how much you need here in a second.
Right.
And then you have the other types, which we're not big fans of, which are permanent, and sometimes they're called whole life. They're called universal life, variable life, equity index life. They come up with all types of names for it. The problem with these is they are just flooded with fees. They're super expensive. They're trying to combine basically life insurance along with investments.
Right. So these are the ones that have something called cash value.
That's right. Yep. So you'll see a cash value component to it, and in some cases, you build up this cash value, and you think that that's going to be yours one day or your beneficiaries one day, and then you pass away, and sometimes that cash value goes away.
Right.
And so you lose the cash value. All that money that you spent paying extra for these types of life insurance just goes away sometimes.
Depending on how it's structured, and we won't get into details of that, but just know that they're very complicated, they're very complex. In the state of Florida, as of the date of this recording, there's a tax that you pay on the dollars you put in there just to get into it.
That's right.
Okay, so it's sold a lot of times as an investment, but you're already starting behind the 8 ball. And again, because of the complex nature, a famous billionaire in this country who a lot of people know says you should not invest in something that you do not understand.
That's right.
Okay, and these, if you look at the prospectus for these cash value policies, they're about that thick. I've actually read a few. Okay, nerdy that I am, but most people don't. And most people who come to my office with these say, "Yeah, I've got some insurance there with some cash value. I don't really understand how it works." The moment I hear that, I'm like, "Okay, let's take a step back and see where we're at with this."
That's right. Yeah, they're very confusing, and they have a ton of expenses and a ton of fees, and they're just not a good value for your money.
Right. So as Jason mentioned, we're not big fans of cash value. We normally lean towards term for most situations. One, because they're less expensive.
That's right.
Okay. One of the reasons they're less expensive is because the person selling it to you is making a lot less commissions than those that have cash value. And again, you'll hear all the different arguments. Oh, but this is permanent, so the term insurance will go away probably when you're older.
Yeah.
So now you don't have it when you're going to die and use it.
That's right. And we're not against insurance agents. There's some good insurance agents out there.
Absolutely.
But they're kind of drinking the Kool-Aid. And so they're being pressured to sell some of these sometimes. And a lot of times it doesn't make sense for you or your situation. And so, not only do they sometimes get paid a huge amount of commission to sell these products, but they have all types of little one-liners that kind of help you think that it doesn't make sense. Like, term insurance is like renting, and it's going to go away and you're going to lose all that money. And they're going to say certain things like that. And you just have to be ready for that, because you really don't want to mix your risk management, basically the life insurance piece, with the investments. Okay, try to keep your premiums as low as possible on your life insurance. Cover the risk, but then use your savings from that to be able to save into your investments.
That's right. And talking about that, they'll say, "Oh, but you get this tax-free." Okay, your investments, you get it tax-free. Again, we don't want to get too details. We're actually going to do another lesson on this. But if you look at and you analyze the amount of money you put into these whole life or permanent policies, typically the break-even point, which is the point where the amount of money you have in it versus the amount of money you put in it, is about 6 to 8 years.
Yeah.
So that means for the first 6 to 8 years, your cash value is a lot less than what you actually put in it. Okay.
Yeah. And once you break even, it's not like you're making a huge return. And we've run tons of comparisons, and the return is extremely low.
Right.
Because the thing is, sometimes these things are sold when people don't even need that much insurance or don't need insurance, period, and you're still having to pay for life insurance just to be able to have the benefit of the investment, which doesn't do really well either.
And a lot of these policies will promise, a healthy dividend, or might say, our company's paid, 4, 5, 6% dividend historically on average, which is great if you look at it, especially today. Wow, interest rates are really low as of the recording of this video. But when you actually calculate the true return,
after you back out the premiums that you pay,
after you calculating the IRR, internal rate of return, with the premiums and expenses, everything, it normally is not the level of the dividend that's promised. So again, we don't want to get further into detail, but this is why we typically avoid permanent insurance and highly recommend term insurance for most people, to avoid for unnecessary expenses services and coverage and get covered, which is important,
Yes.
for the least amount of money and cost to you.
That's right.
Okay, so how much life insurance? So we've talked about the types of life insurance. How much life insurance is another important question, and this is really going to depend on several factors. Okay, as you can see on the screen, you know, it's how old you are, how much money you're making, and what percentage of your money is relative to that household, to whatever household you're part of. Do you have outstanding debt? Okay, and number and age of dependents. Okay, the more younger children you have, the longer and more insurance you're going to need. Okay, so a typical rule of thumb is 10 to 15 times of your annual income is what most people will insure themselves for.
That's right.
Again, we always encourage you to do a specific analysis, but this is an industry rule of thumb. So for example, if you make $95,000 a year, okay, typically you may want to be covered for $950,000 of life insurance.
Right.
That sounds like a lot, but again, if you've got a 1-year-old, okay, that you intend to support till they're at least 18, okay? Well, think about the cost of a child, okay? And your income of $95,000 not being around for 18 years if, God forbid, something were to happen to you today.
That's right.
Okay?
Yep. And remember, too, you know, if you're single, you don't have any kids on the way, you know, then you may not need, you know, life insurance.
That's right.
You know, or if you've gotten to the point where all your kids are out of the household, you've built up an amount, you know, amount of assets, and you don't have really any debt, you may not need life insurance at that point either. And so we're actually trying to get you to that point.
That's right.
To be able to get your kids through college, get them out of the house, you know, get debt free, help you build up your investments, and so then you're self-insured and you
That's
no
right.
longer need life insurance.
That's exactly right. So we've talked about the types of insurance. We lean towards term. How much insurance? Usually about 10 to 15 times your income. And then the third consideration is how long you should have it for.
That's right.
Okay. As Jason was saying, it's going to depend, but a typical rule of thumb is as long as people are depending on you and you haven't built up enough assets
That's right.
or income streams that depend on your income, that's the duration that you
that's
should
right.
get it for.
And so even if your kids are out of the house, but you haven't built up enough assets and you still have some debts, then if you pass away, your spouse is still depending on your income.
That's right.
So in that case, you do still need life insurance.
That's exactly right. So an example of this is, for example, if you're a single income earner and have 3 child dependents, okay? So here's an example of the age of the dependents. You have a 17, a 12, and a 6-year-old. You should have enough insurance, for at least 12 more years. If you see that, because we use 18 years old as the age of which a person, a young man or woman, can be financially solvent for themselves.
Right.
Okay, they can go get a job, etc., and figure that out. So you should have at least 12 years. And again, this is a single person. If you have a spouse and you're trying to have retirement goals together, we always recommend you do an analysis for yourself. But here's an example of how long you should have it for and how to make that consideration. Typically, young families have it term 20, term 30. Older families might get term 10, 15, or at least till the mortgage is paid off. So again, all these other considerations.
See, that's the thing that when Paul says term 10, term 20, term 30, you know, that's how long the term is. So you can get a 15-year term that lasts 15 years. You can get a 10-year term that lasts 10 years, 20-year term that lasts 20 years. So that's how long the term is.
And what that does, it guarantees a price that you're paying for those 15 years, or for those 20 years.
Premiums.
Equal premiums, which allows you to budget better, which obviously, as we talked about in the spending plan, helps us down the path to financial freedom.
You'd be surprised too how cheap it is. It's really not that expensive.
Assuming you're healthy and you don't have any other considerations. So those are also other factors, and it's important to take that into account, you know, when we're looking at this. So what is the goal of life insurance? Again, to leverage an insurance company dollars, okay, for a death benefit while you build up your assets. When you have life insurance, you protect your family.
That's right.
When you protect your family, there's peace of mind, and you've protected risk. Hopefully you never have to use it, honestly. Just like car insurance, hopefully you never have to use it, okay? But you have it in case it happens. And if you never use it, and if that's the goal, then you want to pay the least amount possible, and that's why, again, term insurance leads you to purchase it, recommended by us, and leads you down the path to financial freedom. So there's a lot of considerations. We're always going to encourage you to do an analysis of your circumstances, because you see there's these multiple variables, but we are going to encourage you to have life insurance, not because we're hoping something bad happens to you, but because you want to have peace of mind that if something does, your family's taken care of. One last thing. Jason did mention if you're single or if you're a young couple with no dependents. I have had cases where some people have family medical history where their mom has developed, breast cancer early, and there's this thing called insurability.
Yeah, it's true.
So if your plan is to have children and you have this history, that might be the case with you, but you're healthy right now. Some people, and I've said, yes, blessings, my blessing, go get insured now while you still can, okay,
Right.
while you're still insurable. But again, very specific circumstances.
Yeah, and in that circumstance, maybe you haven't even met the love of your life and you don't have
Right.
kids yet. Maybe you could extend it to 30 years at that
Right.
standpoint,
Right.
to give it a longer time
All
frame.
this to say that it's important, it's an important thing to have and important to consider in your particular circumstances. So we hope this helps, and we hope to see you soon.